did have a sixth winning stretch coming in on Wall Street as well. Coincidentally, for some of the major indices overseas, it was the best week that we witnessed since the month of November. So you had a lot of earnings coming in. The jobless claims fell for the second straight week. And gold managed to pair gains, though. You had the benchmark crude for the week, which was up about 1.7%. But at least the kind of signs and inclinations, Nikunj, that we're getting are such a far cry from what we witnessed on that day on the 5th of August, sixth winning session on Wall Street.
Yeah, I mean, what we saw 2 weeks ago versus where we are right now, it's very easy to say that markets have moved on. And they moved on for the right reason, which is that US recession fear has got addressed. Yen carry trade has got contained, and the fear that US economy in a sense is going to be going into a downward spiral, that fear, because of the data points which have come out late evening, they also are getting arrested. So we are in for what really could be called as from a risk off to a risk on kind of a perfect scenario. Good thing for us is that in this decline, there are two things which have happened. One, crude has decisively started showing signs of peaking, and the 10-year paper, or the US 10-year paper, is below 4. So even though we saw what could be called as a big shakeout, couple of scary days, advent of volatility, big spike, but things have really, I mean, at the end of the day, if you look at that entire sequence, equities and financial assets have come as a winner in this entire chop and churn, so to speak, given their volatilities, where dollar index is, and most importantly, where yields are. I mean, sub 4 is something which psychologically really tells you that markets right now are no longer worried about which way inflation is going to move.
Right. In fact, cues coming from the D streets as well. We are closer to 79,000 mark on the Sensex, under 24,200. And the day before yesterday, we saw almost 26 stocks out of 50 constituents ended lower. So there was specific pressure, some kind of an unwinding, which was visible in our own markets, led by technology, metals, of course, after the mining rule actually came in. How do the data show right now, Nikunj, as far as Indian market is concerned? Can we catch up to the big risk on which you're talking about globally? Is that due as well here?
See, we never fell
that much
on a disproportionate basis. So Indian markets fell the least, and we have hardly, I mean, if today's add back happens, we are almost at a new high, so to speak. We are not very far away from 25,000. So frankly, from an Indian market standpoint, it was about global, it was not local. On that bad global volatility patch, we fell the least, and that's the reason why we are likely to perhaps not move up also in line with the global markets. But what is the thesis for India right now? What is the template for India? The template for India can easily be divided into 2 or 3 large parts. One, that DIs are buying, FIs are selling, and markets are convinced that trend is here to stay. B, churn has already started in some of the PSU stocks, so selectively, whether it is defense, railways, maybe some PSU banks, they've already started showing signs of topping out. See, there seems to be a renewed vigor now in some of the new tech stocks, starting from that grand listing of Ola a week ago to where Paytm is, how Zomato has moved up. I guess that action is clearly evident. And third, I guess the market is now getting ready in terms of, some defensive bias. When I say defensive bias, it could be a combination of select pharma, some consumer names. I think those are the ones. Where I think now markets would be curious, I think soon we'll start talking about Diwali, Dashera, Ganpati, so the festival season will start again, and that's the time when things like auto dispatch numbers, what will happen to the consumer demand, retail indicators, all that I think would be in focus. So ahead of election, it's always policy related stocks. In summer, it's always companies which benefit from summer, like air conditioning, air coolers, aerated water, that space does well. Ahead in and around monsoon, it is always the rural facing stocks which would be in focus. And now ahead of the festival season, which is still a distance away, from a market standpoint, the positions will be taken now. A lot of auto stocks, a lot of retail dominated stocks, all of that will start coming to fore now.
Okay, that is going to be the texture of the market and what we can watch out for as well by way of a sectoral move.
If you like this video, then like, share and subscribe to ET Now.